Hi there, welcome to the studio. I am joined by Stefan Nelson, the CFO of LeoVegas. Welcome into the studio.
Thank you. Good to be here.
Great to have you. So now that LeoVegas forms part of MGM Resorts, how does that change your day-to-day duties?
It's a good question. I would say not that much, really. We're still running the same type of business as we did before we were acquired. Obviously, now we have a very strong owner with fantastic IPs, and they have strong financial capabilities, so we can raise the ambition level and run even faster. But with that said, I think we're still able to run the day-to-day business quite, independent in how we want to do it in order to succeed.
And you've mentioned about it feeling as though you've become a private company since the delisting. How does that change the long and short-term pressure of delivering as a business?
Yeah, and it's true, right? Because we used to be listed on the Stockholm Stock Exchange, and there was obviously every quarter we need to stand in front of investors and explain how the last 3 months went. I think these days we can afford ourselves to be much more long-term in how we run our strategy, which I think is extremely helpful for us as a fast-moving business in a very dynamic industry. With that said, we still obviously need to manage the short-term expectations and our own short-term targets in order to kind of put ourselves in position to win long-term. But it is true that you can afford to look much more strategically on things than a few years ago.
And with the backing of MGM Resorts, that gives you scale and resources. But how do you maintain LeoVegas's edge? Of course, it's a fast-moving business with a challenger mindset, but do you see any risk at losing that ethos as part of a bigger organization?
No, it could have been if we had the wrong owner, so to speak, but that is definitely not the case here. I think we still have a kind of independent management team, and we're working very closely to the head of MGM Digital, Gary Fritz, who's now also the Chief Commercial Officer of MGM. His background is also in fast-moving digital businesses, so he's very well aware of the need to be agile and run fast. And I think it's very supported to be able to work closely with a few key stakeholders in order to kind of achieve our goals. So in that sense, I think this has been a perfect marriage, so to speak.
Marriage, that's a nice term, isn't it?
It is.
So, of course, you run a very different business to the core MGM Resorts operation. How do you manage expectations being a global parent with a business that operates across highly fragmented international markets?
Yeah, it is true, right? MGM Resorts they're coming from the land-based side. They literally control half the Las Vegas Strip, and that's their legacy. But what's true also is that their legacy is to be a casino and entertainment business, and so are we. And if you listen to the CEO of MGM Resorts, Bill Hornbuckle, he talks a lot about digital being the big growth engine going forward. So for us, it's a huge responsibility, but also a massive opportunity to be managing and responsible for all the MGM's digital operations outside of the US. So I think that with that comes expectations, but also we have supportive owners that have high long-term ambitions, and that's great for us, right? Because we can aim higher.
And it feels as though at the moment the online industry is sort of gearing up for a change of the guard as brands grow to challenge the current incumbents amid a backdrop of higher taxes and stricter regulations in legal markets. Where, in your view, is the next phase of growth for the online industry?
Yeah. I mean, first of all, I would say that in regulated markets, because you still have unregulated markets, so you have operators operating in without paying taxes, without responsible gaming. But in the space that we're active in, it's never been as complex as it is today. As you mentioned, taxes are higher. There are more and more regulatory restrictions, and that poses a challenge. I think you asked about growth, but to start off with, in order to grow, you need to take market share by having the necessary scale, the necessary technological advantages, and the right experience to run faster and offer a better product than our competitors. Because the way the regulated markets are growing, and we also have a threat from the unregulated, the black market, so to speak, I think that there will not be space for as many operators as in the past, but for the operators that have the right infrastructure, the right talent, the right financial capabilities, there's still huge opportunity to gain market share in regulated markets like UK or Spain, Italy, the Nordics. But again, you need to win by having the best product, the best friction-free player experience, and be able to adapt and to regulatory complexity.
Now, regulation is obviously tightening for operators, particularly in Europe. How do you see that shaping your approach to growth going forward, and what advantages do you feel LeoVegas has?
Yeah, I mentioned a bit in the previous question, but I would say that we want to be more distinct and where we focus our capital allocation and our resources. We understand that we can't win everywhere. So we want to focus on the markets where we feel that we have a competitive edge, where we already have a strong brands. We also have a fantastic brand in BetMGM, right? That is, the MGM brand is well known to millions of people around the world as a fantastic entertainment brand. So I think we have the right starting points, but we do believe that we need to focus on markets where, as we say, we have the right to win, where we believe we can take a top 3 or top 5 market position. Because there will be less operators in each market. I'm not sure I answered the full question, but I think that's how our mindset is changing versus previously a one-size-fits-all approach, partly to be much more localized and understanding that players in each market have different requirements and preferences.
So it's been interesting to see LeoVegas acquire the likes of Push Gaming and the Tipico US platform, bringing technology in-house. Does this give you the foundations to build, or do you see further acquisitions on the horizon?
Yeah, I think the acquisitions we made, Push and the Tipico US business, which literally we acquired for getting their sportsbook, shows that we really want to control our own tech destiny, right? So we now can basically, we're quite independent from third-party providers, and that also gives us a competitive advantage versus many other operators. We're obviously always looking out for attractive acquisitions if we find it. It's not easy to find an acquisition that meets all our criteria and also is priced right. It's important to say. But sure, I mean, we have a fantastic infrastructure in place, and if we can find an operator that adds volume, has a strong position in one local market, we're definitely going to look at that. But we're quite picky.
Nicely admitted. So considering corporate development and M&A sits under your remit, how do you assess a potential target?
Yeah, I think, first of all, we want to see what they have that is unique, right? That is, call it that, sustainable. We need to understand what the secret sauce is in the business and that they won't disappear if we acquire them. We obviously want to make sure that the business has an attractive database. And when I say that it is a compliant business, they are not, abusing the players in any way, because that would just mean that we need to shut down quite a lot of the business we acquired. That's kind of a starting point. But what primarily we're looking for is strong positions in one or a couple of markets where the acquisition can either add speed or add some sort of advantage, which we can't do ourselves, or we would save time from acquiring it. And last but not least, if we can find a strong management team or founders who wants to continue to run the business, that's extremely interesting, right? Because we're buying people as well.
And as the CFO of LeoVegas, a mobile-first gaming operator, what is your vision for the finance function itself, and how do you see your team and its capabilities evolving?
Yeah, that's obviously close to heart for me. I think that a finance team in general in this industry, maybe in all industries, needs to go from being a reporting function to a very analytical function, basically supporting management in running the business, understanding the revenue drivers, understanding the cost base, and be very much supportive to the rest of the organization. I think that enables us to take the right strategic decisions, the right decisions on capital allocation, and can also support our other teams from product and tech to compliance to commercial to run faster and make the right choices. So for me, I'm focusing a lot on analytics and using data to take decisions. That's exciting, right? That's fun.
Yeah. And what does the year ahead look like for you?
Yeah, well, you never know, right? Because things change fast in our industry. I think we've endeavored on a lot of big strategic projects the past couple of years. You mentioned the acquisitions we made. We went live in Brazil together with our partner over there. We launched the BetMGM brand in several markets. So 2025 for us is a lot about execution. We want to continue to launch our new sports book in multiple markets. We're looking at BetMGM brand. What's next for that brand? But first and foremost, we want to focus on building and offering the best product, the best player journey. I think that there's a lot to do to which will also generate a lot of growth for us. So I think folks, for me, from the management team, from all the leaders, is kind of execution in 2025. And obviously, we want to rapid growth as well.
Wonderful. Well, I hope that all happens for you. Thank you for coming to see us in the studio. Thank you, Stefan.
Thanks so much.